And good evening, everybody. This is Michael Filighera. I am with logicalsignals.com, also tradershelpingtraders.com. And this is the Elliott wave update for the NASDAQ 100 for Wednesday, September 22nd, 2021. The market did a pretty strange little roller coaster ride today. As you can see by the chart, we did go up again and put in an additional high above what we saw yesterday at 15,163. As the minor wave 4 correction did continue. So I relabeled the chart, and that minor wave 4 still consists of an A, a B, and a C wave. And then I put the 4 here. Now we have to continue to allow for additional upside. It is now broken above the hourly 200, and it now remains above that hourly 200. So we have to continue to give some room to the possibility that the market will continue higher. And on that note, I will put in the Fibonacci retracements for it's an upside move. I don't want the upside move. I will put them in for as we had them, and they would be for, again, yes, a fourth wave correction. So let me do there. And as we can see, the market nearly got up to the 618 level, which is 15,255. We need to continue to allow for this. And not that I think that it's all going to fit right now. It still is within the confines or within the structure that I would consider a fourth wave. And it just surpassed the 50%. Getting up to the 618% level would be pretty high for a fourth wave. And the no break zone, so the line that it cannot cross over, is 15,307. Actually, 15,308 would be the exact mark. And if it breaks above that, this is basically this whole structure that we've been counting off of the thus far all-time highs at 15,709 would be left as a three-wave structure down. And it still might just be a wave A, and then what they're doing, this would be a B wave, and we still would expect an additional decline to follow, but it gives additional room for the B wave to continue to rally. So I'm leaving that open, but this is the labeling that I'm putting on right now because it does seem clean. Again, noticing because we're so close to the highs, we're not really selling off. And that would be the anticipation. If indeed this fourth wave is done, then we should begin to move lower in the start of the minor fifth wave down. So how I need to leave this right now, we have potential. Let me take this back up to the hourly chart so we can see it more cleanly. We do have the potential that the market is going to put in an A, a B, and a C, and that would be wave A. Instead of a 1, 2, 3, 4, 5 to complete 5 minor waves down, which then I probably would label as an intermediate level, wave 1 or wave A. If this is going to be left as 3 waves down, then I would label it as minor A, minor B, minor C, intermediate degree A wave. And then we begin an intermediate degree B wave. And so it doesn't necessarily change that we're still within a corrective phase. It just rearranges the structure and what expectations for additional downside would entail. So yet to be seen, but that is the alternate view, so to speak. And so, but I'm going to continue to look for a minor wave 5 until the market breaks above. And if it does break that level, then I'll be putting in some changes. So, if we get up to the hourly moving average here on the hourly 200, then then we're starting to get above a level that I don't think we should. So right now, I'm kind of counting on any additional rally to be contained below that 200-day moving average. And then for the next down wave to begin, and that would be a minor fifth wave down. And we continue. I changed the extensions to include the new high today. So we're still looking for basically a move below this low at 14,000, I think it's 107 actually. Yeah, 14,807. And the most common relationship between a wave 5 and a third wave is that the fifth wave will usually come in at 0.618. And that is at 14,779 or 780. And that does put in a new low below what we had. Also most common is that the fifth wave will be equal to the third wave, and that comes in at 14,503. So we have a zone from 14,780, I'm going to call it, all the way down to 14,503. I really, at this point, don't expect that this wave will really start to extend. But the way the market is choosing to interpret today's news, number one, that China did come to an agreement to make payment on Eurogrande's notes and to make an interest payment, but I don't know much past that. But that is what created this bounce. That just came right out of the blue in that news, and they raced it up to 15,204, and then it just dropped all the way back down. Then it raced up on the Fed, and then it dropped all the way back down, and then they rallied again. So crazy roller coaster day on that respect. But now they're holding the market higher, and the Dow continues to tack on an additional 100 now on top of the 338 that it rallied during the US session today. Now, the markets were up much stronger than they are now, with the Dow at one point was up over 400 points, with the NASDAQ closing up about 150, but it was up an additional, this is 80, about 40 points. So it was pretty close to being up 200 points itself. And that, to me, was nothing more than just a reaction or the bounce that still is going to be associated with the severe decline that we had. So what we can expect for tomorrow, it's really a coin toss. They may just think that all the bad news is out and everything is rosy, and they're just going to jump back in and they're just going to continue to buy it. So I'm not sure, but I want to give both sides of that coin. My expectations, if I'm going to leave that as a 4, is that the market will start to work its way lower. If they come in and it's like, nope, we're all done and this whole pullback is finished, then we're going to move higher. And if we tend to get up and we start moving to new highs, so we get back above 15,530 and we continue to move up, then we possibly could be looking for new highs. And this would be left as 3 waves. And then I'm going to have to refigure what all of what came before this was, because obviously this would then be a third wave, completion of a wave 3 on a larger scale, and this would be a 4. And we still have this big 5th wave. So a lot of things out there. We've got to let the market work this out, and then it will tell us. So we need to bear in mind and keep open on the possibilities. This, again, the labeling stays the same until the market tells us differently. And please understand, as we continue through in the counts, they are fluid because the market is fluid. So we give both sides. I attempt to give both sides of the picture, one that is bullish, one that would be more bearish, as the market begins to indicate what its intent is. This continues to be a very strong decline. Taking back as much 50% of it, maybe close to 62%, is not uncommon. But if they want to continue to rest on the news that came out today it is not necessarily all that good. But Elliott does not take news events into consideration on a wave count. So that's why I have to now let the market tell me. If the market is intent on going, well, interest rates are this, and the economy is chugging along, et cetera, well, then the Elliott count would reflect that in terms of when it breaks above levels that force a change in the count. Right now, it hasn't. So as long as I can adhere to the rules and the guidelines that have been given by R.N. Elliott himself, then I'm going to keep the count the same as it is. Once the market tells me nope, then I will be clear, as I have just now, that this would then be labeled as a 3-wave decline, an ABC decline, and we're back in rally mode. But that would suggest that this is 1, 2, and we're beginning on a 3rd wave. And so it should not just break it, it should accelerate. If it doesn't accelerate, well, then I'm going to be looking for it to go back down and finish this side of the wave. So that's the point that we're at. And that's where I'm going to leave it, because we'll see tomorrow morning when we come in, and we'll see what the markets are doing, and then we'll be able to go from there. So remember, we need to be able to trade what's in front of us. That keeps us open to both sides. As a day trader, I'm not really caring if my count is correct. I'm caring more about whether I'm going to be able to read the price action and have it and be able to trade. So that's like taking these waves and being able to say, well, yeah, react to what's in front of me, just like here. And this actually was not all that easy to trade, but it certainly was clear. So there was money to make in both directions. And it wasn't not always easy, because the waves got pretty out of control. Right first thing this morning, 1, 2, 3, 4, 5, 6, 7, 8, 9 green bars up on a 15-minute chart. On the 5-minute chart, it was an astronomical number without a pullback. That is a lot of buying, and that's what they came in, and that's how they started the day. I took it as a finishing wave to complete wave 4. As I described before, wave 4, fourth waves and B waves are deceptive and can be destructive. And this one certainly was destructive to anybody who happened to be short, and for a downside move, this was destructive. And it was deceptive. This was the interest rate. This was the Fed meeting. They loved it. They hated it. They loved it. And so what happens now is just like, well, that's how we figured they got it down. They're just moving it up. Because the market did begin to sell off into the close. So anyway, we shall see. All will come to pass, and we'll find out most likely tomorrow. And the next update will be on Thursday, the 23rd.